This video highlights the key points of how I've journeyed into the cryptocurrency space as what I would call a traditional investor. So if you wanted to know a bit more about my investing style, I've done videos about that, so you can check it out so you understand what I mean by traditional. The conclusion is pretty simple. I'm increasing my allocation towards cryptocurrencies by a fairly large amount, but I want to walk you through my thought process, and the hope is that by you, and perhaps you identify as a traditional investor, you can understand the thinking steps that I've gone through, and maybe you either disagree, or maybe you agree, or you could just use some of the points as additional research. Hey guys, it's Sunmin, and welcome back to Your Money Game, the show where we'll save, invest, and feel better about money. So let's start at the beginning. And this was around sometime in 2018 when I first heard of the term Bitcoin. And all I knew was that it was priced at something like $20,000 and it was crashing all the way down to about $3,000. I heard the words cryptocurrency, I saw a video about this crazy Bitcoin guy who was super enthusiastic. I read about the crash of Mt. Gox, and then on top of that, I'm hearing stories about friends who lost quite a fair bit of money. So as you can imagine, that really started my entire impression in a very negative way. And that's why in 2019, I didn't really dig that much deeper. I understood that, hey, Bitcoin is an alternative currency built on a blockchain, a finite limit supply, and all that thing, but it still didn't really suck me in. It's 2020 and the pandemic happens, and then straight after the crash, begin a huge rise that you kind of see even until today. It's during this year that it began to open my mind a little bit more, and here are the key points that started that ball rolling. The first and most obvious one was that crypto isn't only Bitcoin. Duh, right? I learned that there are different use cases where Bitcoin had the narrative of being a store of value. You had Ethereum and smart contracts with decentralized applications and all the different services such as lending, borrowing, and the list goes on because there's so many more functions and types of cryptocurrencies being created. And of course, as an investor, what really got my eye is the sheer amount of growth that was happening in the space. It started with the overall market cap of Bitcoin growing, and then of course lumping together all cryptocurrencies. And I know it's still 2020, but as we cross into 2021, it hit that $2 trillion mark. And while it's still very small relative to the global investing space, the rate of growth is just really impressive. And the third point is that it's not just money and market cap, but really watching this space absorb such a vast amount of talent and new businesses that were forming. I'm old enough to remember watching how the internet went from simple search engines to social networks and e-commerce and all that. And right now, it's as if you're watching that beginning to bloom in the cryptocurrency space as well. Now, I wish I could tell you I had some kind of brilliant analysis that caused me to take a very specific action. But the truth is, again, I consider myself relatively conservative. So at that point in time, I understood that the space was growing. The simple narrative was, hey, why don't you invest 1% of your net worth in it? And that's what I did. Fast forward to today, I've invested in Bitcoin and the smart contract space, specifically Ethereum and Solana, but more on that later. What I want to walk you through now is the thought process and the key questions that I was asking myself along that journey, and hopefully these are the key questions that you have in your head that, again, some of my answers might help with. The first big question is, what gives Bitcoin value? There were a few key reasons, but starting with the main one, which is the devaluation of the fiat currency system as a whole. Now this could be a video all on its own, but let me give you a quick summary of how I'm understanding it. If you've never heard of the term fiat currency before, just understand it that it is money as we know it today. It's issued by governments and it's backed by trust. That's all. For regular people like us, the value of money is simply being able to purchase something that you want, and you see it as a price and you have money that can pay for it. But over time, the value of money actually decreases. And again, you probably experienced it yourself, where whatever you could buy 2-3 years ago, you can't buy the same amount of it today because the value of money unfortunately has shrunk. And it's kind of like being a frog in boiling water. As long as the degree of change isn't extreme, we feel that, hey, it's comfortable, it's normal, and that's just the way it is. But the reality of it is that in the past couple of decades, things have been changing outside of the awareness of most people. In particular, governments around the world have been printing money, especially the US. But why does the US matter so much for people like us here in either Singapore or Malaysia? I did a video a little bit more about the US interest rates, and you can really dig into that if you wanted to know more. The point is, money as a whole continues to be devalued. And if you happen to own assets, that's great. But even so, the question is it enough to offset the devaluation that's happening? And in particular, as a traditional investor, my worry is that there are a lot of asset prices that are inflated simply because of this scenario. Bitcoin seems to be one of the assets that are able to counteract this effect, and in the past 13 years of its existence, it seems to be performing that role quite well. Will it continue to provide the exact same performance in the future? Nobody really knows, but the signs show that it is increasing in that ability rather than going backwards. That leads me to my next point, which is that as a network, Bitcoin continues to grow and the value of the network grows along with it. There's a fancy theory behind that you can research more, which is called Metcalfe's law. But think of it simply as that logic, where as a network grows, the effects of it make it more and more powerful. And it's the same way that a lot of people were thinking about how Facebook and Amazon had value before they were truly profitable. Initially, many people couldn't see the value of those type of companies because they were evaluating it purely from a traditional financial lens. If modern money is given value through trust, what you're trusting with Bitcoin is first of all the code, and second of all, the value of trust continues to grow as the network grows as well. So you're trusting more and more people to keep that network healthy. The next question is, how safe is Bitcoin? If you're an investor in the stock market, have you ever asked yourself, what makes the stock market safe? Is it the exchange? Or really is it the fact that those companies that are underlying those stocks, they are businesses, right, that won't suddenly all collapse and go bankrupt? Individual ones do, but as a whole, the market is resilient. With Bitcoin, it's about the safety of the network and the question of how reliable is it. The first point is that it's built on a blockchain which uses cryptographic standards, and that's secure. The second point is that it is decentralized, so it's not controlled by one single entity or relying on maybe one server that if it goes down, it takes the whole network down with it. And thirdly, as the network grows, it becomes increasingly harder to hack because it just requires so much more resources to attack a network that is as large as a global network that Bitcoin currently has. Next, as a standard, it's becoming increasingly adopted by more than just individuals. You now have corporations, you now have states, countries, and investment firms. So there are many more players that have recognized the value of what Bitcoin is and that trust is a reassuring base. Sometimes people talk about the 50 and 80% drops that have happened before in its past. And while there's no guarantee that something like that won't happen again, what's more interesting to look at is that in each of those times, Bitcoin has not only bounced back, but has continued to grow in value. And I think therefore there is some merit to the thought that what hasn't killed that network already is proof that there is strength in the network. The final question is, why invest in Ethereum and that whole smart contract space? Well, my Bitcoin investment is thought of as a store of value that can potentially increase over time. Investing in Ethereum and Solana for me is an investment almost similar to investing in the broad tech space. There are two compelling things that are drawing me to the smart contract space. The first, which I kind of talked about a little bit earlier, the kind of many use cases that are forming that can help consumers with many abilities that are related to payments, related to ownership of assets, related to contracts that are automated and all that. The second thing is something that I mentioned a bit earlier, which is Metcalfe's law. But specifically in the space, you're seeing so many new businesses form. You're seeing so many coders, so many investors, so many different players, gamers, users, all these different things. While I'm sure that most of them won't survive, the speed and the rate of innovation that's happening on top of those platforms, it's enough for me to be excited about the space and wanting to have some money invested in it. Right now, Ethereum as a platform has the most number of apps being built on top of it, and that makes it a front runner. But what's interesting is also the number of developers that are working on projects on top of those platforms. And most recently, the number of developers in Solana actually overtook that of Ethereum. Again, whether that results in anything, who knows? But what I'm observing is, again, the value of network that is growing in those two spaces. But of course, this is not a advice or recommendation to buy these three things, but just sharing with you my mindset of how I'm thinking of it as a traditional investor and not somebody who's trading these things on a regular basis either. So thanks for watching, guys. If you got value out of this, I'd appreciate your support in clicking that like, sub and bell button, and I'll be back again next Sunday with a brand new video. And until then, you take care and keep playing your own game.